Hi, I'm Mark Skelsey, editor at downsizing.com.au. Now, we know that many downsizers or potential downsizers across Australia are in the situation of what we call asset rich but cash poor, where they may own quite a valuable property, but they don't have very much cash to back it up with. And that lack of cash can make that transaction of downsizing all the more difficult. Now, last week, a new financial product or housing product came out into the market and was launched. And I'm very happy to be joined by Mark Macduffie from downsizers.com, who's here to tell us about his new product. So Mark, welcome to downsizing.com.au, a namesake in the URL space out there.
Yeah, thank you. And thank you for your time. I'm looking forward to the interview greatly.
Great, thank you, Mark. Now, just before we get into what this product actually is, can you just tell me a little bit about yourself, your company, your background?
Sure. My name is Mark Macduffie. Obviously, I'm the managing director of the new prop tech company, downsizers.com. We allow downsizers with sufficient equity in their existing dwelling to buy their future dwelling or future property with zero cash deposit. My background is 29 years of technology, innovation, design, and development in 5 different countries. Up until the downsizers.com journey, I led a large team in Commonwealth Bank, helping design and build their technology and apps for 11 years before I left the bank. My 2 co-founders, Mike and Damien, are both property experts. One is a property developer long-term, and Damien is an architect by trade. We really started to look at this. The genesis of this came from often we found, or certainly in the property development space, we felt that there weren't as many options for this cohort of buyers, and often property developers on one side of the equation have to prove to the bank or their lending banks the quality of their underlying purchases, and normally they'll take a cash deposit 10%, and the purchaser will have the other 90% or so on mortgage. Developers actually find that really kind of problematic, and we found that this growing segment of the market was underserviced, and particularly with some changes in regulation. On the plus side, there's the ATO tax incentive for downsizers who can put $300,000 into their super tax-free, or $600,000 per couple. That's really great incentive, and that's kind of mobilized this segment of the market. But there's also been some negative headwinds there for this cohort as well. So banking regulation changes, responsible lending laws actually make it harder for this cohort of people to do bridging funding, bridging finance. So that asset-rich, cash-poor movement that you referred to at the start of this call is actually compounded by that. So we saw an opportunity here to use technology to bring those 2 sides together, which is the property developers building high-end custom stock for this downsizer cohort, and connecting them with downsizers who are asset-rich, cash-poor, and looking to simplify their lives.
So, Mark, let's get into the nitty-gritty. What is the actual product, and what are you offering downsizers? Let's just get straight to the value proposition.
Yeah. So the value proposition for us is that we make it as simple and easy as possible for asset-rich, cash-poor downsizers to buy off-the-plan dwellings with zero cash deposit. We do that as a technology platform, but it's underpinned by a partnership with Deposit Power. Deposit Power are a financial organization that has been providing deposit bonds for 30 years in the Australian market, and they've helped more than 1 million homeowners secure their future house. We've worked with Deposit Power to create a completely bespoke downsizer bond that recognizes that this cohort are a much less risky proposition than perhaps a first-time homeowner that requires 90% mortgage. So really what we're offering downsizers is this frictionless ability to use their existing dwelling to buy their future dwelling. You enter into an agreement with the developer, and the developer pays for the bond. So some of your subscribers and members, if you like, will be familiar with buy now, pay later options. And this is similar to that in that we've flipped who pays. we've been able to create this downsizer bond and pass the fees on to the developer. The developers in turn are educated by downsizers.com on their purchases. So really we've kind of engaged with property developers that understand that this cohort of people are really a safe bet to sell their properties to, and less risky than a first-time homeowner buying off the plan, and they're willing to pay the premium for that. So we remove the barrier of finding the deposit for the downsizers with existing dwellings.
Yeah, well, as you say, coming up with a deposit for a new apartment is no small matter. You're probably looking at potentially 10% of the cost. The apartment could be worth into the millions of dollars. I guess you're finding when you're talking to people that people just simply don't have that cash sitting around, or if they do have that cash, it's going to have significant impacts on their lifestyle, what they may want to achieve, their children, all those things. So this is a cash-free movement policy. And I guess, as you say, it's required a bit of thinking to actually work out how it's going to work as well.
It's taken a great deal of consideration, and with it, from my perspective, you have to kind of tackle problems in a different way. And innovation for me, and in particular the way that I've been tackling things for Commonwealth Bank before Downsizer, is that you almost need to break things a little bit. And so we've pushed the boundaries here from a financial product perspective, and we're so grateful for our partnership with Deposit Power, because they also shared our kind of vision that this cohort controls more than 50% of the residential wealth in Australia, yet they don't have liquid cash to pay for a deposit. And the more downsizers we speak to, the more we hear the same problem, right? Selling equity, cashing in term deposits, maybe selling their house and renting between the house that they're in and then the one that's being built. None of that's really a great experience for downsizers looking for, might be the last big buying decision of their lives. And we're trying to make that as seamless and frictionless and easy and low cost as possible. So from a downsizer's perspective, there is a cost. It's a one-off transaction fee, but you're not paying any of your deposit. You're not paying 10%. You're just paying a transaction fee, and the developer pays the rest.
Yeah, and look, I think as part of this as well, my understanding is you've done some research about what's happening out there and the number of downsizers that are potentially in the market and the current trends that are going on. So, I mean, what's that research showing in terms of the desire of downsizers to move into apartments or townhouses, particularly newly built ones?
Yeah, we've partnered with a company called Digital Finance Analytics. They've been doing consumer research on household buying intentions for more than 10 years now. And what that data is particularly telling us that there is an increasing number of a macroeconomic trend, if you like, of this downsizer baby boomer cohort kind of getting to that stage of their lives where they almost wholly own their house. So the data that we're seeing is the vast majority, so 1.68 million householders plan to downsize in the next 5 years. They will release somewhere around the $1.7 trillion of residential property as they look to downtrade. We can see it's somewhere in the region of 69% of those downsizers have 3 and 4 bedroom houses, and their target state is to, the majority of them, 70% nationally or thereabouts, are looking for property values of less than $1 million. So there is a shift between, large bricks and mortar house down to off the plan, community, almost custom designed properties, not just units, but, communities that have townhouses in as well. But lifestyle wise, it's easy, it's designed for the downsizer market where, the floor plans are big, the ceilings are high. We're not talking about these high density properties. We don't have those types of properties on our platform. We're specifically only working with property developers that understand this cohort and what they're looking to move into.
And that's an important point as well. We're not talking about every single apartment out there. You do have specific relationships with developers and a specific number of newly built or under construction apartments, mainly on the East Coast, it should be said at the moment, that you can use this deposit bond arrangement, basically.
Yes, we've launched with in 3 states, New South Wales, ACT, and Victoria. Whilst we have something like 430 units to choose from at the moment, our roadmap will be rolling out nationally. Incrementally, we'll have more and more in those hotspots of where we see the demand for downsizers, and trying to work with developers that are building those specific to those specific needs for this segment.
And as well, as you indicated there is a cost at the end of the transaction. I think it's a $1,500 cost.
Correct.
Upon settlement, but there is no upfront cost. So you can actually go into this transaction, because it would seem pretty tough if a transaction designed for you to avoid shelling out cash makes you shell out cash at the start. But how is it that you can actually have this form of financial bond with only a $1,500 fee?
Yeah, great question. I just do want to correct one thing. It's the $1,500 transaction fee is at exchange, not settlement. Yeah. So the downsizer has to pay upon exchange. Okay. The reason that we feel one of the main reasons we've been able to create this downsizer bond with deposit power is that we've looked at this cohort of 55 and above and their buying behaviors. And we looked at data that showed us that buying off the plan, this 55 and above segment almost never fail to settle after they've exchanged. What that means is that if we can prove that this cohort of people buying off the plan are a safer bet for developers, then we can reduce the underlying bond insurance premium. It's not an insurance instrument, it's a bond instrument, but the risk is less, and therefore that risk is less to pay for, to the point where we can pass it on to the developer and they're happy to pay for the fee, because it's in the region of, it's a sales and marketing fee for them. And if a downsizer walks in to their showroom that qualifies because they have enough equity, as we said before, we know they're less risky than a 30 to 40-year-old couple that may be buying their first home that have 90% borrowing. So being able to understand the underlying risk in that cohort of downsizers that are 55 and above means that the premium or the cost to the developer comes down to the point that they're willing to pay that for the downsizer.
Yeah. Okay, Mark. Well, look, thank you very much for quickly taking us through the downsizers.com product. I can say as well that there is a story in our newsroom as well, which goes into a little more detail about what's there. Is there anything else you'd want to add before we go, or do you think we've covered it pretty well, Mark, in terms of your product?
I'm grateful for the questions. I would encourage anybody listening to this that has any kind of interest, go on to downsizers.com. There's an absolutely free eligibility check or affordability check. There's no obligations to that. All we do is, as I said, there's not a huge amount of stock there at the moment, but every time somebody tells us where they're looking to buy, we start to engage with developers in those areas. So I would encourage your listeners, subscribers, members, to go on to downsizers.com, have a look, and reach out to us if you've got any questions. We're here to help.
Yeah, super. Well, I look forward to the first case studies coming through when these apartments are built and we've got people moving across without digging into hundreds and thousands of dollars of cash. So that's fantastic. Okay, thank you very much, Mark. Appreciate your time. Good luck with your journey. Sounds like it's been a bit to date, but the future's looking great. Thank you very much.
Thanks, Mark.